Invest Africa, proudly brought to you by Kpmg.
Hello and welcome. I'm Kukule Tutsele and this is Invest Africa. Now, if you're watching this show, you're more than likely to have a bank account. It's difficult to imagine that about 75% of this continent is unbanked. It's a massive untapped market that is evolving in a way many would never have predicted. But let's take a look at who is part of this market of the unbanked. While almost 3/4 of the African population is unbanked, and not only because of the fact that they live in rural areas, but also because of the traveling distance that they have to make it within to the cities in order to open up these banking accounts. So living in very dire straits there, unfortunately not giving them access to the world of financial capital. Let's also take a look at the average demographic with regard to this. If you are the average bank holder actually on the African continent would be a male who's over 25 years old with a tertiary education, living in a city where he would be able to have access to this kind of facility, meaning that a lot of youth and women don't have much access or actually fall on the lower scale with regard to this. But this picture is certainly changing as we do see lots of technologies coming up to the fore, where mobile is actually being highlighted to take over the normal financial institutions to actually assist and fill in with regard to this gap. Well, let's take a look at this exciting conversation where we take a look at mobile money and mobile banking and the future that it holds for the African continent. Joining me now to share their insights in Johannesburg is Associate Director at Kpmg Africa, Jolene Young. From Lagos, Toyo Aviosu, the Chief Executive of Paga, and from Nairobi, Habil Olaka, the Executive Director of Kenya's Bankers Association. Well, our first question goes to you, Mr. Olaka. If you can perhaps paint a clear picture for us as to what the current mobile as well as financial banking landscape looks like when it comes to the east of the continent.
I think you mentioned something about the fact that most of the continent is still not able to access formal financial services, which indeed paints a true picture of where we are currently. But as you mentioned, again, things are changing quite rapidly. If I can give an example, like say, for the case of Kenya, there was a FinAccess survey which shows the level of financial services access in the country. And there's been an evolution from 2006, for example, when almost 40% was completely excluded. Now, coming in 2013, that number has come down to just about 25%. So there is quite a significant proportion of the population which is moving from completely excluded into possibly using informal financial services and then formally into formal financial services. And there's been quite a bit of evolution across the country. And in Kenya in particular, I think of two innovations that have contributed to this. One is agency banking, and the other one, as you mentioned, is mobile banking.
Interesting insights there. Maybe let's cross our attention now onto Kenya, where Mr. Ovioso joins us. Tayo, it does seem as though from the western part of the continent as well, you are making some changes and adjustments and adapting to the needs of a lot of the Africans on the continent with the revolution of mobile money.
Absolutely, Gugu. Thank you very much for having me on the show. As you said, I think the situation at the moment where in Nigeria we've seen now 36% of Nigerians having access to formal financial services, but really what's going to drive that change and increase that number are really two trends that we're seeing in Nigeria. One is the increasing access of people to the internet and to services that are online. I think last year Nigeria ended at 70 million Nigerians online. This compared to 5 million in 2005. Majority of those people are going online through their mobile. And that's the second trend, right? The NCC yesterday, which is the telecom regulator, announced that there are 136 million subscribers to the mobile telephony in Nigeria. And so those two trends are really going to drive the delivery of financial services in a way that is not requiring the need for infrastructure such as physical buildings. And those are the trends that companies such as Paga that I run in Nigeria are going to leverage as well in terms of how we deliver financial services to the mass market. by leveraging a network of agents. We currently have about 7,000 agents in 34 states of 36 in Nigeria. And by delivering a service that allows us to bring these financial services in partnership with banks to the mass market without having to build bank branches. And I think this is really going to help change the picture that we're seeing on the ground now.
A key word that you used for me there was the internet, and maybe, Jolene, this is the appropriate time to come to you here. Do we often underestimate the power of the internet and the number of not only Nigerians but Africans as a whole who are online and switched on?
Absolutely. If I have a look at the social media revolution, you've got Facebook, you've got Twitter, you've got LinkedIn. Those are the mechanisms that many people around the world, specifically in Africa, have cottoned onto. And as Oya said from Paga, the number of internet users have exploded over the past 3-5 years. And that is due to the accessibility of smartphones and the more reliable access to mobile network operators and mobile telecommunications across the continent. So you're far more likely to have a mobile device that you can link to the internet as opposed to a computer that you'll link to your traditional internet connections, whether it is a fixed line or a mobile line that you will have, yes.
So where does the opportunity lie, if we can stay with you here, especially when it comes to the making use of this data revolution or internet revolution? Is it for financial institutions that are already established to enhance their mobile money offerings, or is it for the telecoms players to add their value, or independent mobile operators to become more innovative with this mobile money strategy?
Okay, so there you have a interesting dynamic. The dynamic is, if you start at the top, when I look at a solution, I always start at the top. Who's at the top? Well, the central bank regulates banks, and the telecommunications authority regulates the mobile network operators. So you've got two regulators who have fundamentally different principles and rules as to how they want to do it. A lot of the African central banks are going towards capping the way in which mobile network operators can lead a banking solution or a payment solution. So you have two different models. If you look at M-Pesa, it was a mobile network operator-led solution, whereas in Nigeria, the regulation clearly states that it must be a bank that is in charge, because banks are trusted advisors in financial, they are very regulated, and that's where the central bank has the control over how that money moves in the economy. So if you move to, say, banking or mobile banking, and where we go into the financial inclusion, but it is about giving people access to transactability. That transactability can manifest itself in a number of ways. Looking at the number of mobile subscriptions, not all of them, if you look at the Facebook users versus the active mobile subscriptions, the Facebook users are about 11 million versus 134 mobile. That means that not everybody is in possession of a smartphone which can then access the internet. So it's taking into consideration what the devices are that are out there, and those devices will drive the way in which mobile banking and financial transactability will drive going forward.
Maybe this is a good point as well, where we could actually get Tayo in, because with Paga, you've actually tried to sidestep the inconvenience to the situation by innovating with launching Paga to the market. Some of the challenges, maybe if you could walk us through that you have experienced in trying to establish your business.
Yeah, and I think before I do that, on the last point, I mean, I think it's important to not give too much emphasis to the mobile networks in terms of the access to the internet. I think that's going to change over time, where we're going to see more fixed line and other radio solutions getting to the internet. I'll give you an example. What we've done in Nigeria, Paga is independent of any bank and any mobile operator. You can have a Paga account tied to up to 5 different phone numbers, because if you've been to Nigeria, you see people come into a meeting with 3 phones and lay on the table, right? So we all use multiple networks. And what this has allowed us to do is to be able to work closely with the banks. We work with 8 different banks to allow our services to be offered to the mass market. And you can go across multiple networks. About half of our agents are using their telephone to do their transactions. The other half, such as the one I visited this morning in one of the busiest markets here in Lagos, in Oshodi, uses his computer. And he has internet from a company called SpectraNet. here in Nigeria, and he goes online and he does his transactions on Paga. Everyone in his neighborhood there come to him for various transactions, to send money to banks, to send money to people's phone numbers, to pay for bills and to buy airtime, and also to open savings accounts. So what we've tried to do is to build a platform that is indigenous, built here on the continent, and that works to the actual, as our CTO would like to take, appropriate technology for the market, right? And so that works across all networks, and allows the flexibility to handle the transactions in different ways. So I think there's a lot of innovation that can be leveraged around just having it be an open platform. So I think the regulator in Nigeria has actually got this right. Most central banks around the world leave financial services in the hands of the banks and in the hands of companies that are fully regulated by them alone. I actually think some of the other countries in Africa are the exception, not the rule, across the world.
Maybe it's time we get Habil into this conversation because you represent the bankers here. Are the bank, or is the banking society overall, or from what you see in the East, are they responding in the appropriate manner with regard to this new innovation regarding mobile money?
I think there are a number of factors that I would like to bring in, and one of them is what my Nigerian colleague mentioned, the role of the regulator, because I think for the case in Kenya, we would not be having what we have currently if the regulator had not acted the way he did. What I would call almost like regulatory innovation, because the law that allows the innovation that you mentioned, the M-Pesa, was not put into place until just about last year, while M-Pesa has been in operation since 2007. And this was because the regulator approached it from a more proactive approach where you allow the innovation to prosper, and then you look at the risks that are emanating from the innovation and try to manage those risks, rather than putting a regulation in place and then you allow innovation to only work within that perimeter of the regulation you have put in place, which sort of like stifles innovation. And in the case in Kenya, I think we have seen the approach by the regulator being very effective in terms of allowing innovation to prosper. Having said that, I think one of the things is that in Kenya in particular, we saw initially banks were in a way a little bit opposed to the introduction of M-Pesa, for example. But I think with time they have sort of like come into a scenario where they leverage onto each other's strengths, where the banks are able to access the subscriber base that the likes of M-Pesa and the other mobile network operators provide. And through this kind of relationship, they have been able to work out in a good working relationship. So we see now banks extending, not just using the mobile banking platform for purpose of just payment system, but they are extending it to provide other services. Like right now they are mobilizing deposits through the mobile banking platform. They are also extending credit through the same mobile banking platform. So it's going beyond the normal limited payment service provision to providing other banking services across the channel.
Sounds like the key here is to figure out who needs to regulate who, or which regulator is the appropriate one. But we'll answer that question for you right after this quick ad break. Welcome back to Invest Africa. Now tonight we're talking about mobile banking in Africa. Remember, you can tweet us on @CNBC Africa with the hashtag Invest Africa. So with me is Jolene Young, Director at Kpmg Africa, Tayo Oviosu, who's the Chief Executive of Paga, and Habil Olaka, the Executive Director of Kenya Bankers Association. Well, just before the ad break, we actually got into the discussion of who needs to regulate who. Is it the mobile bank, the mobile players that need to be in charge charge of the regulation when it comes to mobile money, or is it the banks? And it seems as though we're stuck between the two here, Jolene. Is there a perfect answer at all?
There is a near perfect answer. There's never a perfect answer. So if you have a look at the current situations, and I'll just use the two countries that we have online with us today, Kenya and Nigeria. Nigerian Central Bank, let me take a step back. The Bank of International Settlements has determined that central banks have the responsibility to manage and regulate payments. So bringing that into the picture now, you'll find that a central bank versus a mobile telecommunications regulator, they were at odds in terms of who has the authority to regulate. It's now determined that from a payments perspective and for the financial stability and the systemic risk reduction across the ecosystem in the financial world in any country, the central bank needs to determine that. Going to Nigeria, the Nigerian Central Bank have got an enabling regulation that allows a company like Paga to put in a platform that any bank can tap into, and they've got one very, very key element right, and that is interoperability. It's not only that they can be connected to one another, it is that they are truly interoperable, which means that a customer at Glow can send money to a customer at Orange without any hassles, and they can use the Paga platform or they can use any proprietary platform that any bank has created. So that's where the enabling regulation has come and really served the population. And we're going over to Kenya. Yes, the regulator did leave the environment or the market to determine the way in which the mobile payments need to go out in the continent. However, when it came that the bank who held the trust account was now being put at risk by the value that was being held in the trust account, it says that the central bank then said, we need to split this up so that there is no systemic risk or knock-on effect if anything happens in that bank. And Habil will know from a Kenyan Banking Association, there was a long debate in Kenya around that. So the central bank still has to oversee the whole market and the ecosystem end to end to ensure the safety and the security of the payment system as a whole, to make sure that you still attract those foreign direct investments, that there is legal certainty within the system, and making sure that the environment is there. The other point is, in Kenya, that they've done differently is they've created the ecosystem around M-Pesa to say that you will have banks, you will have local retailers, you will have the butcher, the baker and the candlestick maker who will accept your mobile money. Whereas in Nigeria, that ecosystem is still forming. So it goes back to both ways. So bricks and mortar, yes, there is a place for them, but yes, they will become less. And the agent banking model is certainly a very, very powerful model to reach the population. I mean, nearing 174 million in Kenya, there's a lot of people to reach in a very, very disparate area. And that agent banking model is really, really key to get that done.
Let's come back to Habil here just to give us more insights, especially when it comes to the regulation and the security of this money, because a lot of people say that there's an opportunity for fraudulent activity to take place through the use of mobile money. Habil, regulators, are they managing to clamp onto this fast enough?
Yeah, I think one of the things is that the way the mobile banking, especially the operations by the mobile network operators, I think they're already brought in under the control of the requirements of the Financial Action Task Force, and therefore the probability of the systems being used for example, things like money laundering or financing of terrorism is fairly limited, because there's a limit in terms of how much you can transfer across in one transaction, which is hardly $1,000 equivalent. There's a limit to how much you can have on your account, for example, per day. There's a limit to how many transactions you can have per day. So those limits are put in to ensure that the probability of the system being used for example, to do money laundering and the rest is fairly limited.
Tayo, maybe if we come to you just on the threats or the negative perception, does it often have a negative impact then on yourself as well as co-innovators in your business who want to push for the innovation of mobile money?
Yeah, no, I think there's, what we've actually found is that people have, trusted our system, not just in terms of, the thinking about fraud, but also from the perspective of when they put their money in and when they do a transaction, does it occur? And that's the first level of trust. And I think I've seen this trend with all our agents where when they start, they put a small amount of money in, they see it work, they make money from it, and then they put more in. Now, what we have to do as an innovator here is to never look at fraud as black or white, right? And think about it from a rings of security perspective. The regulator has definitely done its part in terms of limits, and actually just yesterday, the Nigerian regulator came out with a new framework around the limits on mobile money transactions, and they removed per transaction limits and looking at daily limits only, which I think is actually going to really spur the growth here in Nigeria. But by putting limits on transactions, you actually then reduce the risk of money laundering. But however, even with that, we still have to make sure that we are doing multiple things to protect the customer. Things around making sure customers protect their username and their passwords, making sure that we're monitoring what devices they're coming from, and we're doing things in the background to really ensure that if we for any reason do not think this is the person they think that we know them as, we interrogate further. So all these things are just to protect the system and ensure the sanctity of our platform. So without doubt, you have fraudsters who try to break into systems, but we've been very fortunate not to have any of that happen to us, and we continue to monitor and to work very hard at making sure the platform is secure.
Ty, I want to keep with you and pick your brain on the cross-pollination of mobile payment services. Why don't we have, or will we ever see a day where we have an inter-African mobile money service? We know that the likes of M-Pesa have tried it, but it works very differently in various regions. But your thoughts, could that ever be a possible solution to Africa's problems as a whole?
I think we actually will see it happen. In fact, the genesis of what's going to make this happen, not just in Africa, but across the world, is being developed now in California. It's a company called Stellar. And Stellar, if anyone goes online, check for Stellar.org. And Stellar is building the framework and the protocol, so to speak, that would allow for the transfer of money between disparate mobile money schemes and different currencies. And it's been set up as a not-for-profit, which I think is the right approach, to provide players like Paga and M-Pesa the framework for which we'll use to connect to each other and allow for transfer of money, and that will have such a huge impact on the African economy. The big things, I think, that are affecting trade across Africa, between African countries, are how do I pay and how do I transport my goods across. Sometimes it's actually easier to go outside of Africa and come back in than try to go direct. So I think as we tackle those two problems, it absolutely would. So the way I see things playing out is, you start with the mobile payment system for the country. You offer agency banking, as we talked about, reach the masses from that perspective, and then you leverage programs such as Stellar to allow for inter-country trade. And I think you're going to see that eventually play out.
Jolene, to come to you, given the growth figures that we're seeing for the continent by the year 2020 plus, does this mean that it's a perfect partnership and justifies the reasons why we're seeing so many financial institutions scattered across the continent trying to maybe leverage on this inter-African trade regarding mobile payment services?
So you've stepped right into regionalization across the continent, and that talks to the Africa Union has a view that there will be a one united, consolidated Africa at some stage, and we'll be able to trade with one another. Because far too long, the innovation and the way in which Africans can trade with one another has been left, and Tayo just said, we'd rather go outside to come inside because of the restrictions. But if you have a look at the continent, I would always view the continent as East African Community, West African Monetary Zone, SADC, which is the Southern African Development Community, plus COMESA, which extends down from Egypt all the way down the east and southern seaboard of Africa. The regionalization initiatives are bringing that reality closer. So intra-regionally, the East Africans have a real-time settlement mechanisms between the countries, whereby a mobile network operator in conjunction with the bank can do cross-border transactions within that East African region. So that says that if you look at the way in which the financial systems are organizing themselves from a regional perspective, there's free trade, there's common customs union, there's looking at ways in which the free movement of capital and people around that to facilitate intra-regional trade. The SADC region has also moved in terms of having that regional payment mechanism. So you will see more countries being able to settle through a common mechanism under the auspices and the jurisdiction of the central bank, which is where your legal certainty comes into play. And that will say that the mobile network operators will now step further into that regulatory domain to ensure that the system as a whole is secure. So whether it's a mobile payment or whether it is a billion-dollar corporate payment, it needs to ensure that the whole system is secure. So you will see that move, but as the regional integrations start maturing, that is when you will see those cross-pollination of mobile payments, mobile solutions, reaching the levels that they should be reaching to bank the population.
It almost sounds like a fantastic African dream when it comes to the financial services sector. And Habil, maybe...
the African tale.
The African tale, exactly, Jolene. Habil, if we can bring you in just for closing comments. This African tale that we're referring to, the big dream with regard to cross-pollination as well as African integration when it comes to mobile money payments, do you believe we're on the right track? How far do you think we are from reaching that objective?
One of the challenges that, of course, from an East African perspective is the fact that we are thinking about the East African regional integration, but we can't make payments across the region, which is really a shame. And I think, in my view, we are on the right track, not just in terms of mobile payments, but even in terms of transacting across, say, credit cards, which, for example, in the case of the Kenyan scenario, across the region, we can't make payments across. So I think we are on the right track.
Well, let's certainly hope that we develop stronger going forward. And that's all we have time for tonight. Many thanks to my guests, Jolene Young, Associate Director at Kpmg Africa, Tayo Aviuso, CEO of Paga, and Abel Olaka, Executive Director of Kenya Bankers Association. Please do remember to send us your comments and suggestions. The details are on screen. From myself and the Invest Africa team, it's goodbye for now.